The most important trading rules from Paul Tudor Jones. Paul Tudor Jones is one of the most successful traders of the past century. His net worth is around $3.3 billion, and he mainly focuses on short-term trading. The New York Times reported in March of 2014 that Paul can claim long-term annual returns of close to 19.5% in his $10.3 billion flagship fund, Tudor BVI Global. We've collected the most useful trading rules he has been using to become successful. Hi, welcome to the channel. If you are new, please consider subscribing, so that you don't miss future videos. Remember to hit the like button just to motivate us to continue making these videos. By the way, if you are interested in making money online via trading etc., visit the links in the description box below. Let's get into today's video. Here are the most important trading rules from Paul Tudor Jones. 1. Never play macho with the market and don't overtrade. My major problem was not the number of points I lost on the trade, but that I was trading far too many contracts relative to the equity in the accounts that I handled. 2. If I have positions going against me, I get out. If they are going for me, I keep them. I will keep cutting my position size down as I have losing trades. When I am trading poorly, I keep reducing my position size. That way, I will be trading my smallest position when my trading is worst. 3. Never trade in situations you don't have control. I don't risk significant amounts of money in front of key reports since that is gambling, not trading. For, if you have a losing position that is making you uncomfortable, get out. Because you can always get back in. 5. Don't be too concerned about where you got into a position. The only relevant question is whether you are bullish or bearish on the position that day. 6. The most important rule of trading is to play great defense, not offense. Every day I assume every position I have is wrong. I know where my stop risk points are going to be. I do that so I can define my maximum possible drawdown. If my positions are going against me, then I have a game plan for getting out. 7. Don't be a hero. Don't have an ego. Always question yourself and your ability. Don't ever feel that you are very good. The second you do, you are dead. 8. I consider myself a premier market opportunist. I develop an idea on the market and pursue it from a very low-risk standpoint until I have repeatedly been proven wrong, or until I change my viewpoints. 9. I believe the very best money is to be made at market turns. Everyone says you get killed trying to pick tops and bottoms, and you make all the money by catching the trends in the middle. Well, for 12 years, I have often been missing the meat in the middle, but I have caught a lot of bottoms and tops. 10. When I trade, I don't just use a price stop, I also use a time stop. If I think a market should break, and it doesn't, I will often get out even if I'm not losing any money. 11. Don't focus on making money, focus on protecting what you have. 12. You always want to be with whatever the predominant trend is. 13. At the end of the day, your job is to buy what goes up and to sell what goes down, so really who gives a damn about PEs? 14. Look for opportunities with tremendously skewed reward-risk opportunities. You should always be able to find something where you can skew the reward-risk relationship so greatly in your favor, that you can take a variety of small investments with great reward-risk opportunities, that gives you minimum drawdown pain, and maximum upside opportunities. If you learned something new in today's video, please remember to click the like button. Leave a comment with your thoughts in the comment section below. Again, hit the subscribe button so that you do not miss future videos. We will see you in the next video.